Hello, visionaries. Welcome back to Market Visionary, where we analyze, explore, and uncover the most compelling trends and opportunities in finance. Today, we're diving into the dynamics of the U.S. economy as 2024 comes to a close and the roadmap for 2025 begins to take shape. From GDP forecasts to corporate earnings and market movements, we'll unpack the data and provide actionable insights for your investment journey. A mixed economic landscape. GDP growth trends. The U.S. economy has shown remarkable resilience throughout 2024. Despite geopolitical tensions, persistent inflationary pressures, and a restrictive monetary policy environment, key indicators point to sustained growth. The Atlanta Federal Reserve's GDP Now model recently revised its Q4 growth estimate upward to 3.2%, a significant improvement over the 2.8% growth recorded in Q3. However, not all forecasts align. The New York Fed's Nowcast paints a more cautious picture, predicting a slower growth rate of 1.8% for the same period. This disparity underscores the complexity of economic forecasting. While optimistic models suggest firming economic activity in December, concerns over manufacturing contraction and elevated borrowing costs temper expectations. Key sectors, including housing and durable goods, remain under pressure, reflecting the broader challenges faced by an economy navigating multiple headwinds. Hey everyone, welcome to Market Visionary. I'm just starting out, and I need your support. If you're enjoying this content, please hit thumbs up, and subscribe. As a thank you, I'm offering gifts to my early supporters. Just comment, subscribe, take a screenshot, and email it to the address in the description. You might get a special reward. Thanks for being here. Let's grow Market Visionary together. Consumer spending, the engine of growth. A key pillar of U.S. economic strength lies in the resilience of consumer spending. Throughout 2024, inflation-adjusted wages have consistently grown, providing households with greater purchasing power. This trend is particularly significant as we head into 2025, where consumer sentiment will likely play a pivotal role in sustaining economic momentum. Retail data for Q4 highlights mixed results. While Walmart has reported robust performance, buoyed by a strong demand for essentials, Target's disappointing results reflect uneven spending patterns across demographics. Despite these challenges, aggregate consumer spending remains healthy, with discretionary categories like travel and technology benefiting from pent-up demand. The holiday shopping season will be a critical bellwether for Q4 performance. Early indications suggest a strong showing, driven by aggressive promotions and increased consumer confidence. However, rising credit card delinquencies and tighter lending standards could constrain spending in 2025. Corporate earnings, a bright spot. Corporate America delivered stellar results in Q3, with the S&P 500 companies reporting an average earnings growth rate of nearly 6%. This marks the best quarterly performance in 3 years, defying earlier predictions of stagnation. Looking ahead, Q4 earnings growth is projected to accelerate to 12%, providing a strong foundation for sustained performance in 2025. Key drivers of this growth include technology innovation. Companies in the AI and cloud computing sectors continue to outperform, fueled by transformative applications across industries. Energy resilience. Despite volatility in global oil prices, energy firms have managed to stabilize profits through efficiency gains and renewable investments. Healthcare expansion. Demand for biopharmaceuticals and advanced medical devices supports steady revenue growth in the sector. Moreover, corporate balance sheets are healthier compared to pre-pandemic levels. Many firms have prioritized debt reduction, positioning themselves for growth even in a high-interest rate environment. Stock market performance, a year of resurgence. The S&P 500 has been a star performer in 2024, delivering year-to-date returns exceeding 25%. This comes after 2 years of turbulence marked by the pandemic recovery and geopolitical shocks. Institutional forecasts for 2025 suggest continued momentum, with major benchmarks expected to climb another 9 to 12%. However, this optimism is not without its risks. Potential tailwinds. 1. Monetary easing. The Federal Reserve is expected to cut interest rates modestly in 2025, providing liquidity support to markets. 2. Global synchronization. Economic recovery in Europe and Asia could bolster international trade and corporate earnings. 3. Technological leadership. U.S. companies remain at the forefront of innovation, attracting global capital flows. Potential headwinds, geopolitical risks. Continued tensions in Eastern Europe and the Middle East could disrupt supply chains and energy markets. 2. Debt concerns. Corporate and national debt levels remain elevated, creating vulnerabilities in a rising rate environment. 3. Market sentiment. High valuations may limit upside potential, especially if earnings growth fails to meet expectations. Sector spotlights, opportunities and challenges. 1. Technology. The technology sector remains a key driver of market performance. Artificial intelligence, quantum computing, and 5G technologies are revolutionizing industries, creating unparalleled opportunities for growth. Companies investing in generative AI tools and automation stand to benefit from increased productivity and cost savings. 2. Renewable energy. As the world transitions toward greener economies, renewable energy investments are set to surge. Solar, wind, and energy storage companies are receiving significant policy support, making this sector a promising long-term play. 3. Space exploration. The space economy is gaining traction, with companies focusing on satellite deployment, space tourism, and lunar exploration. This high-risk, high-reward sector offers immense potential for investors willing to take calculated risks. 4. Consumer staples. In times of economic uncertainty, consumer staples offer stability. Strong brands in food, beverages, and household products continue to deliver consistent returns, making them a safe haven for risk-averse investors. Macro trends to watch in 2025. 1. Interest rate policy. The Fed's cautious approach to rate cuts will significantly influence market liquidity and corporate borrowing costs. 2. Global inflation. While U.S. inflation has moderated, price pressures in emerging markets could impact global supply chains and trade dynamics. 3. Labor market dynamics. A tight labor market supports wage growth but also puts pressure on corporate margins, particularly in labor-intensive industries. 4. Climate policy. Governments worldwide are ramping up climate commitments, driving investments in green infrastructure and clean technologies. Strategies for smart investing in 2025. 1. Diversification. Spread your investments across sectors and asset classes to mitigate risk. 2. Focus on fundamentals. Prioritize companies with strong earnings, robust cash flows, and manageable debt levels. 3. Embrace innovation. Identify disruptive technologies and allocate capital to sectors poised for exponential growth. 4. Stay nimble. Be prepared to adapt your strategy in response to evolving market conditions and geopolitical developments. The road ahead. As we navigate the complexities of 2024's final quarter and look toward 2025, one thing is clear: preparation and informed decision-making are your greatest allies. The U.S. economy continues to demonstrate remarkable resilience, offering numerous opportunities for growth and wealth creation. By staying attuned to market trends and adopting a disciplined investment approach, you can position yourself for success in this dynamic environment. Thank you for tuning in to Market Visionary. Don't forget to like, subscribe, and hit the bell icon for more in-depth analyses and actionable insights. Together, let's turn today's challenges into tomorrow's opportunities. Until next time, keep dreaming, keep planning, and keep growing.